Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. As we get everything you need to know in 90 seconds at 9 o'clock, with news the banking crisis has shifted to Europe and investors are betting big that the Fed will be not changing rates next week. Oddly, some key US Treasury yield inversions are being wound back sharply at the same time. But first we start with news American retail sales were expected to post a small slip in February from January, and they did. Year on year, they're up 5.4% nominal, so not keeping up with inflation. It is car sales there that are the drag. US producer prices are up 4.6% in a year in February, a sharp reduction from the January rise. They fell month on month. Wholesale inflation is leaking away quite quickly now there. And US business inventories were essentially stable in value in January, and that allowed their inventory to sales ratios to retreat slightly. And for the first time in a year, the Americans don't really have an excess inventory problem. And China's February data came in pretty much as expected for their first full months of opening up. Retail sales rose 3.5% in a no surprise result. Good, but not that strong really. Industrial production was up 2.4%, a tad less than expected. And while we're talking about China, we should note that its youth unemployment level has surged recently, now topping 18%. A year ago it was 12%. In Argentina, their inflation has topped 100% year on year again. They haven't had it at this gruesome level since their ugly hyperinflation of the early 1990s, when it raced to 20,000%. In Zurich, the Credit Suisse share price fell a disastrous 24% yesterday alone, and it's now down 42% for the year and down 76% in a year. Down 98% since its pre-GFC peak. It is toast, but it's taking a very long time to die. The Swiss National Bank declined to comment or support what is Switzerland's second largest bank. UBS is its largest. Even after an appeal for help from the bank, and after its largest investor, the Saudi National Bank with 10%, said it could not provide Credit Suisse with more financial assistance because of regulatory constraints. The US Treasury 10-year yield starts today at 3.47% and down a risk-off 14 basis points from this time yesterday. And the price of gold will open today at $1,933 an ounce, and that's up $24 from this time yesterday. And oil prices start today down very sharply, down $7 at just on 66 US dollars in the US, and the international Brent price is now just under $72 a barrel. For oil, these are very large daily retreats. And the Kiwi dollar has fallen away again against the greenback on risk-off sentiment. Now it's 61.8 US cents and down almost a half a cent. But against the Aussie, we're firmer at 93.6 Australian cents and a new high for the year. Against the euro, we're also firm too at 58.6 euro cents and up a half a cent. That keeps our trade-weighted index at 70.5, a little change from week ago levels. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.